Hey everyone, how are you doing? My name is David Kinder, and I've been wanting to create this presentation for a while, mainly because I participate a lot on the Insurance Forum's website discussion forum, and you get a lot of different agents that ask the question. Basically, they ask, I've got my license, now what do I do? And so there's so many different kinds of options and different kinds of paths that you can take. And I thought, you know what? There's got to be a different way to help guide the decision-making process, to help determine whether companies are good or bad for what you are looking to do, to determine a career advice that you may receive. And the more I thought about it, the more I came to the conclusion that I consider the monopoly board model to help you to determine where you want to go, and based on where you want to go, what kind of companies you may want to be looking to contract with. And since I have a designation, we'll talk a little bit about designations as well that may help you to enhance your ability to serve that market. So first, let's look at a monopoly board. Where is it? Here we go. Okay. So here with this monopoly board, by the way, in my opinion, if you've never played Monopoly, I don't know what you're doing in financial services of any kind. I think Monopoly, having played it, is a staple. It's a key thing to understanding cash flow and business, even though it's very elementary, it's very basic, and your goal is to not really bankrupt your customers. Please don't bankrupt your customers. Your goal in Monopoly really is to develop cash flow. And that's really the goal in your business as well. And so in Monopoly, we have different kinds of properties, different kinds of color groups, there's different strategies, and I've played Monopoly a lot. Yeah, I'm kind of a geek. And let's talk a little bit about it. Now, in Monopoly, there's going to be one key difference is when you start the game in Monopoly versus when you start your career. In Monopoly, when you first get started, we're talking about traditional gameplay. You go around the board and you collect different properties from different groups, and eventually you'll trade them to hopefully form a monopoly so that you can build and develop it. You get your houses and build it up to hotels. But I would not recommend that as a career move. If you are starting off and you're dabbling over here and you're dabbling over here and you dabble over here and you dabble over here and you dabble over here, what's going to happen? You're going to get nowhere very far very fast. So dabbling without focus is not a good idea in the beginning of your career. Whereas in the game of Monopoly, it's a good thing. You want to get started so you can be able to trade with other people. Okay. So let me give you my outline of what I think the different properties are and things like that. Let's look at Baltic and Mediterranean Avenue over here. In my opinion, that property group represents supplemental health insurance. And there's a few companies that fit that group or that target market. AFLAC, Colonial Life, and Combined Insurance. Combined Insurance, they do individual supplemental health policies. These policies are simplified issue, generally low commissions because you have to be employed by that company. I don't know AFLAC or Colonial Life as much, but generally they have simplified issue, which means that you complete an application, and as long as there's nothing on their medical report, they're going to get it issued. They offer accident plans. They offer sickness plans. They have maybe a disability policy, critical illness, maybe a cancer policy if you're diagnosed with cancer. They also have maybe a reimbursement if you go get your mammograms done, things like that. Okay, these are generally low commission, low premium policies. Nothing wrong with that. Your commission income, you might be limiting yourself a little bit compared to some of the other places on the board. Now let's look at the other ones over here. Now this Connecticut, Vermont, and Oriental Avenue, in my opinion, that represents the business market for group policies. So group health, group dental, group vision, group disability, group life insurance, group long-term care, all those things that can be done on a list billing for a company, and especially if companies already have it. Now, in these two property groups, what I call the group business and the supplemental health, your presentation is basically features, benefits, price, do you want to buy? Okay. Supplemental health, it's additional to whatever coverage they have. With the group life, group health, it's can I get you the same coverage for cheaper, or can I get you better coverage for the same price? That's typically your value proposition. Okay. Now the next group here, they call this the pink properties. They always look purple to me, but they're pink. And to me, that represents the senior market. Now the senior market is generally defined as those who are 65 and up. And it's two primary product groups: final expense life insurance and Medicare supplement policies. And that is a perfect market for that. And you can make some great money working that market. Like the other property groups, this area is also a features, benefits, price presentation. I mean, with Medicare supplements, you're showing the different plan types, what each plan covers, and you're going to choose the company based on the zip codes. That's my understanding. I'm not a specialist in these areas, but I know enough to be very dangerous. And so with Medicare supplements, you should be an independent agent where you can offer multiple companies and be able to offer the best pricing for the plan that the client wants. Also, there are some differences between various types of final expense policies. Some offer day one coverage, some offer graded coverage, some are simple. They should generally be simplified or guaranteed issue. There's a lot of nuances, and as an agent, you need to know what those nuances are. But your goal is to be able to work with as many people as possible. And in that marketplace, you can see a lot of people a day, and those are generally one call, one close sales. I don't see any logical reason why you shouldn't be able to make a presentation and not collect a check for that sale that day at that appointment. Okay? That is if you're doing it right. At the most, you should have to come back one time. But you can do a lot of that business even over the phone too. There's other people that are specialists in that area, more so than me. Again, in that area, I know just enough to be dangerous. But again, this is also features, benefits, and price. And yeah, based on policy definitions and where you're at and the companies you represent, there's going to be some value in that you bring to the table. Okay. Now let's look at some of the other ones. Now you might be wondering, well, what about the railroads? The railroads, since they're everywhere, to me represent the insurance agent that works with term and disability insurance. It's a staple. You need it. And then you can have different conversations that leverage or pivot from that. So the railroads to me is term and disability. The utilities, you got electric company, you got the waterworks up there. To me, those are specialty niche groups. And to me, two that come to my mind are as being a specialist in long-term care and also being a life settlement specialist. Now, what is a life settlement? Life settlement is where a policy owner can sell their policy to a third party and they get a lot of the proceeds of the death benefit back to use for their retirement plan. Okay? And that actually, especially in California, requires special licensing for that. Also with long-term care, there are specialists in that area, and what they'll do is they'll work with other insurance agents as well as other financial planners, investment advisors, and they'll come in and they'll integrate the long-term care policy within the total financial plan. So there are people that specialize just in those niche markets that will work with other professionals to come up with the best plan, best strategy for the client. Okay? So far we've talked about supplemental health, we've talked about group insurance benefits, we've talked about the senior market, final expense, and Medicare supplement. By the way, in that market you might be able to also cross-sell long-term care, annuities, other life insurance. Those things are possible, but so it really depends on the kind of market you're working, the types of people and the conversations you're having. So there's some other factors with that. It's possible. Most agents that are final expense and Medicare supplements usually don't do a lot of annuity and long-term care cross-selling. Okay. So let's talk about the next one, the orange properties. Now, if you're into Monopoly trivia, as I am, one of the things that you'll notice is that even on there's even a Monopoly Wikipedia out there, and if you look up the orange property group, it'll actually tell you that the orange property group is the most popular. It's the #1 property group of what they call professional Monopoly players. Now, I don't know who gets paid to play Monopoly, but the orange property group is where you get the best bang for your buck. Okay? And this is great for cash flow purposes. Now, for me, what market does that represent? To me, that represents the middle income market, working with families that are homeowners, married with children. That's that market, and you're working that market with your insurance license. That market is great because they need term insurance. They can start building up a portfolio of permanent insurance, whether it's indexed UL, universal life, whole life, whatever it is you're doing. Perhaps rollovers to annuities, depending how competitive your annuity products are. Disability income, perhaps critical illness, but they have bigger needs, and in that market, to do a great job, you got to do a fact find. In my opinion, if you're going to work that market, you're not just going to show up and say, here's what my product does, here's features, benefits, price, do you want to buy? That would be the railroads. In this market here, you're going to do a fact find. You're going to find out what they want to do in retirement planning, college savings plans. Do they need liquidity for business opportunities in the future? What do they want to have happen should the worst happen? You're going to ask a lot of questions to do a complete fact find. Now, when you do the fact find, then you go back and you present your solutions at the second appointment. So this is a 2-call close traditionally. And you can work that market very well with just a life insurance license, depending on the product lines that you have with the companies you represent. Okay. Now, why is this some of the best properties here? Well, in Monopoly, there's a few things that we've got going on. You've got your chance cards, because the chance cards can have you go to St. Charles Place, have you go to Illinois Avenue, have you advance to Boardwalk, and it moves you around the board quicker. You have go to jail, and when you go to jail, you land in jail, and you have to get a 6, 8, or 9 to land on the orange property. If you also hit on chance and it says go back 3 spaces, you go back to New York Avenue. And also, as you know, if you roll doubles 3 times, the 3rd time you go to jail. So there's many times where you get to jail, and then 6, 8, or 9, you're there at those properties. So that's why, for the landing purposes in the game, for cash flow purposes, that's why that's some of the best properties you can have. And that's why I look at it as the middle income market, because they're everywhere. And if you can specialize in a population that is everywhere, you're going to do very well. Because the point of being in the insurance business is that we need to get our cash flow going. We need to be profitable today, not 5 years from now. And one of the best ways to get profitable today is to work with an abundant clientele or abundant prospecting pool that wants what we can bring. Okay? Now, let's go into the next property group, the red property group. The red property group is the same as the orange property group. I call it the middle income market still. But it's different. And the reason it's different is because in the red group, you have securities licensing. So if you're with a career agency, you're with a New York Life, Mass Mutual, Guardian, Northwestern Mutual, and you get your Series 6 and 63. Now you're working with the same market, but now you have securities licensing. So why did I make it the same? Well, here, these houses and hotels cost $100 each. Well, over here, these houses and hotels cost $150 each. You have increased costs. And securities licensing requires increased costs. You have your licensing costs, you have your continuing education costs, you have your compliance costs, you have your archiving costs, you've got your E&O costs, you've got so many other costs. But you do have a slight income increase. If you land on New York Avenue, you get $1,000 every time someone lands there with a hotel. At Illinois Avenue, you get $1,100. So your profitability goes up slightly, but you did pay a lot to get there. Okay? So again, the orange and the red are both middle income market. The middle income market's a big market, so it's definitely doable to have it for 2 property groups. Okay. The yellow property group, a little more upscale. In my opinion, this is the retirement property group. To work that market effectively, you're going to need an advanced knowledge of annuities and structuring and laddering annuities if you're going to work only with annuities with a life insurance only license. In my opinion, you may want to look into getting your Series 65 and offering wealth management solutions to go with income annuities. Or if you're with a career agency, you're going to want your Series 7 and 66. And so this is where a lot more money is. You're going to need more planning tools. You're going to need more advanced knowledge. Since I did mention, I'll talk about designations. From the orange property group on up, designations can be very helpful, as long as you know how to convey the information into a way that you can communicate and relate with your prospects and clients. If you can't do that, well, the designation might be worthless. Good designations to look at would be CFP, CHFC, CLU. If you're looking to get into the retirement space, I might look into RICP. That's Retirement Income Certified Professional. There are other retirement designations, but you really want one that's going to be very strategic, something that will look at housing wealth, looking at offsetting spending strategies with life insurance, the proper use and place of annuities, looking at the various kinds of portfolio allocations. There's many different parts in the retirement area, and you're also going to have a lot of competition in that area too. So you need to be able to stand out with advanced knowledge there. Okay, so this is the retirement group, and by the way, you're looking at people at least age 55 and over in order to start to transition your conversations into retirement planning. Okay, the green property group. The green property group to me represents the business market. Now this business market is 401k plans, business buy-sell agreements, key man policies, executive compensation, golden handcuffs. You might be looking at business overhead expense, disability buyout. There's different things there, and this property group doesn't get landed on that much. It just is not that popular. Meaning that the population on that, when I look at the business owner group that really can warrant having such planning done for them compared to the middle income market, is at least 100 to 1 in favor of the middle income market. If you can be efficient and effective in the middle income market, you can grow into the business market over time. I'll get more on that in a moment. But this is the business market. It's more expensive, and it's a little bit rarer that people land on it. It happens, of course, but it's a little bit rarer. Now let's look at the blue property group here. This dark blue property, Boardwalk and Park Place, classically the most popular pieces on the board, or properties on the board. And those to me represent premium finance cases. They may not necessarily be expensive to build up. These are $200 per house and hotel. But landing on them, once you have the hotels on them, seems to be rare. I wouldn't necessarily want to build my entire strategy of monopoly based only on Boardwalk and Park Place. Those seem to be the properties where your goal is to bankrupt the other person, which is great for playing monopoly, but not necessarily great for an insurance career. So these are premium finance, an advanced area. This is where, especially for business owners or large estates that are not liquid, and you need money to pay for estate taxes. So it's a lot of estate planning, or maybe you are leveraging to fund retirement now, and you're only going to pay loan interest for the money you're going to borrow to fund your retirement. Now, there's so many different strategies, so many different ways to work with premium finance cases. Now, so I've gone over the monopoly board. Premium finance cases, we have business owners, we've got retirement, we have the middle income market with securities, middle income market, no securities, the senior market, group insurance market, and we have the supplemental health market. I don't think I've left anything off. If you're asking about property and casualty, there's always a place in every part of it. The question is where does it fit? I'm not an expert nor licensed in property and casualty insurance, so I couldn't tell you if there's a particular fit. I think it fits everywhere in the board. You just need to know your types of clientele. So, now that we know about the different markets, you have to ask yourself, where do I see my best chances of success? Where do I see myself doing well and having a lot of repeat business? Where do I see myself enjoying the business? Now, that's a personality question. That may be a question that you really should have asked before you got your license, because you had a particular vision and thought in mind of how you're going to work once you got licensed. Now, from there, you can then tell whether you're going to get good career advice or not. So, for example, when I got started with a very large career agency, and there's an agency company that you would say we would call them Mother Mutual, okay, which describes any number of larger career agencies. And when I got there, I thought I was going to be the big dog. At least I wanted to be. And, talk is cheap. But I got started there and I said, I'm going to work only with business owners. Now, you remember where I put business owners on the list here. It's the green properties. I wanted to do business buy, sells, key man. I wanted to do the things and be the hero and make a lot of money and do a lot of advanced underwriting stuff. It's what I wanted to do. And I put together, I think it was a 3 or 4 page business plan. And I showed it not only to my manager, but I showed it to the other sales manager and the general agent in the office. Okay? And I thought it was pretty detailed. And I thought it was rather sound. I just didn't realize how often I'd be able to close that kind of business and the kind of work and specialization it would take. I wish that one of them would have said, you know what, David, hold off. This is a great business plan, but you know what? I think that if you look at the general population, if we can work with the middle income market, and we can slow you down a little bit, work with the middle income market, let's get your cash flow up, let's get you closing business on a regular basis, then we'll ease into the business market over time. Now, by the way, I actually had a presentation by Marvin Feldman. He gave a presentation back in, I think it was in 2007 at the MDRT, and it's where he basically said if you try to start in the business market, you will not be in the business within a year. So, lesson learned, I'm not going to try to go into the green properties without getting my feet wet with at least the orange properties. But none of these managers or general agents taught me that. They just wanted me to go out there and get the business, which I don't blame them for that, but at the same time, it would have been a whole lot easier for me to work with families than to try to go out there and get business owners. But that's not the end of my story, because when I went to that agency, I had my designation. I have done a lot of advanced study. And I went to an agency, they had a quarterly agency breakfast meeting, and we had the different specialists of different product groups that come by. And we had one group that came by from a company called Peachtree LBP. Now, LBP stood for Leverage Balance Plan. I think that's what it stood for. They're not around anymore, so I can talk about them. And Peachtree LBP was about a 401k alternative. And instead of deducting the contribution from your taxes, you actually got a loan for that amount. And so anyway, because it is dealing with lending, it actually fits in this category down here. It's a premium finance program. And after that presentation, my manager came to me and said, David, if I knew what you knew, I'd go with this. I'd just run with this. Now, remember how I organized everything, how rare these cases really are, how much that you can really screw these things up, which tells me that I got bad career advice, because they're just looking for the big cases. When really, if they would have just said, David, work with these people here, do 20 cases a month, each one might be smaller, but you're going to be racking up the lives or applications, and you're going to be racking up a lot of premium, and most people are going to wonder what you're doing. So I really wish that would have happened. It didn't happen. It did not happen. Now, in choosing a company or companies to represent, one of the things I noticed is that the career agencies, often they're not well positioned here. They're not well positioned in here either, even though you have securities licenses. They want to be in this yellow space. They want the big money. They want you to work with a higher higher white collar worker or business owner. They want you to live right over here. Get the retirement assets, work with estate planning, work with the business planning. That's where a lot of career agencies seem to fit in terms of their house products. Now remember, if you're at a career agency, if you're not selling enough of the house products, you're not going to be there for very long. So you need to understand where your company's products fit the best, or where you can bring in expertise and make them fit for other situations for a lower tier profile. And that's hard to do, at least on your own. Very hard to do. If you get some advanced coaching and training, maybe you buy a system or two, you can learn to do it. My preferred, if you're going to ask me for a recommendation of who I recommend to get good training from, I would go with the Insurance Pro Shop. They're at insuranceproshop.com, and they'll help you for this orange and red property group here. If you're looking to stay in this yellow and green area, if you can get in there and get in there consistently, then probably the resources and approved selling systems at your company may work. However, I'll just tell you that one of the systems that I was trained on was called LEAP, Lifetime Economic Acceleration Process. It's $2,500 a year, plus in order to learn how to use it, you paid $700 per training session. Steep learning curve, overly complex, and 6 meetings to have with your clients. So if you're going to have 6 meetings, you got to make sure you're going to have that process be worth it. So you're going to be in this area all the time. And if you can't get into that area, if you can't get into that clientele, your days are numbered. You're going to spend a lot of money. You're going to live in the house of pain, as Wayne Cotton would call it. And you're not going to get the rhythm of the business that you need. If you're able to simplify things and be able to do great work with an abundant pool of prospects, that is going to be a great ticket to success. To me, that is the red property group, the orange property group, which is both middle income market depending on your licensing, and even if you need to, here's Medicare Supplement and Final Expense if you need to, just to get the ball rolling so you can start getting cash flow. I talked a little bit about designations. You really, in the senior market, I don't see a need for designations, although there is one designation course of study, I'd call it, the Certified Senior Advisor, which may not be approved in all states to use as a designation, but I think that that course of study could probably help you very well in serving the senior market. Up here, CFP, CHFC, CLU, and then any additional specialist designations out there to back up that main body of knowledge can be very helpful. Getting up to speed, maybe you want to pursue LUTCF and FSCP. Those are offered through NAFA and the College for Financial Planning or the American College. Just pick which one you like. I think they're both about the same. So anyway, knowing this and being able to use the Monopoly board to help model the different markets out there and the different areas that you can work in, I think this might be able to help you to first tell good career advice from bad career advice in terms of picking your market, and help you figure out which kinds of companies you want to work with. And then if you're, working with managers especially, unfortunately managers seem to fail up. Not always a bad thing, but they seem to do enough to get by in order to get onto a salary. And so I have a hard time thinking about career agency managers actually having credibility. But if you're able to listen to them and then apply their advice and figure out where that advice fits best, this model may help you do that. Anyway, I think that's kind of it. I can't think of anything else I need to talk about. I like preparing these things to help me clarify my own mindset. Let me just go through this very briefly. I want to make sure. Boardwalk and Park Place, they're not necessarily the best. Illinois Avenue is the most landed on property. Yeah, we talked about a lot of this. Yeah, the key to monopoly is having focus rather than dabbling, because if you dabble in multiple properties, you're able to block other people in the game, but what you're doing is you're blocking your own success. I still remember the quote from Pursuit of Happiness with Chris Gardner, or Will Smith. And when they're doing the orientation, they say, you reel them in, we'll cook the fish. Well, if you're dabbling in different property groups, you're going to have a hard time building a rhythm. You're going to have a hard time building confidence and competence. You're going to be splitting cases with other senior agents. And so if you're in that mode of just bringing everybody, you're not going to build a rhythm. You're not going to get sustainable. You're not going to build up that cash flow you want. And you're always going to be saying, I don't know what I need to know. I need to work with other agents. So you definitely want to build a focus, ideally from the beginning, as to what you want to do. Not a good monopoly strategy, but a better career strategy. Let's take a look. We've talked about that. The blue property group. This is Oriental, Vermont. We're talking about, okay, there's a few designations there. No big deal. St. Charles Place Estates and Virginia Avenue, the senior market. We've got the middle income market here. Kentucky, Indiana, and Illinois also represent middle income market. I think I covered pretty much everything here. Oh, another designation that might be helpful in the yellow property group is CIMA, Certified Investment Management Analyst. Definitely helpful if you're going to be working with assets under management. Those guys, when they have them, the average assets under management they have is like 300 million. So they do big time business. We talked about the green property group. There's a couple of other designations here might be useful. The CFBS, Certified Family Business Specialist, that's offered through Mass Mutual. That may be helpful. There's also a Certified Exit Planner. Both are probably very similar in their knowledge base to help business owners to plan for their exit strategy and their retirement from the business, and have the business pay them an income. Excuse me. The types of businesses that are appropriate for that kind of planning look for 1.5 million of revenue and 15 plus employees. So most businesses don't fit in there. If you're a business owner, the green property group is for the bigger businesses. Now, I'm not talking about massive businesses. I'm talking about 15 or more employees, 1.5 million or more in revenue. Anything that's lower than that is generally a individual generating their own paycheck and leveraging slightly through a few employees. And that's the majority of businesses out there, by the way. That's a little bit about self-employed planning, disability, retirement, and Boardwalk and Park Place. Again, represent working high income or high net worth individuals, as well as premium finance cases. Landing there is more difficult. And at that point, you actually don't need many designations, but you do need to know what you're talking about. Let's see, what else do I have on here? Talked about the utilities and making career decisions based on your licensing. But if you're just starting out, trying to start out in the green or blue property group can be fatal to your career. You can build up, but don't try to start there. Do joint work if you have prospects that have needs there. So you come across somebody, they say, oh, well, I happen to have a business. We do about 10 million in revenue. I got about 25 employees. Okay, great. You continue your fact finding. You say, you know what, I want to work with a specialist to make sure we bring in the best solutions for you, because there might be ways to leverage your business to help you to plan your personal needs. And if I don't have that knowledge, I want to bring somebody in that might be able to help us structure some ideas there. So we might be able to do some tax arbitrage, we might be able to do some other strategies to leverage your business status. And so again, my recommendations, especially if you're in a career agency, start out in the orange or red property group. Plenty of people in this category, about 50% of the population. Grow over time into the yellow, green, and blue. I'd recommend getting a Series 65 or your CFP CHSC for the yellow group, and start marketing slowly with the green and the blue. And if you have licenses but you're just starting off again, you might have been in the yellow or higher property groups. Lower yourself to the orange and red. And this way you can start building up that momentum, and people will give you referrals, especially if you give a great client experience. To work the orange or red property groups, you need to be highly skilled in fact finding and finding out how you can help them to solve problems. And then the more you understand about insurance, investments, income taxes, retirement planning, and estate planning, the more that you understand, the more comprehensive you can be. The bigger your cases can be, the bigger your referrals are, as long as you also keep it simple. Okay, so that's all I had prepared on that. So that's pretty much it. Use the Monopoly board to help you to figure out where you will do your best business, where you can do your best work. Now you might be saying, well, what are the income ranges? Do the income ranges really differ that much? Maybe. At the same time, you can have more than one property group, but build up. So Supplemental Health, when Combined Insurance was recruiting, they said that their agents earn about $80,000 a year. Well, I need more income than that, so I wouldn't specialize in that area. Over here, you could do more. This is more renewal-based income, so it depends on how many groups you can work with. And then you just keep serving them and serving them, so you make sure you keep that revenue coming in year after year. Here, it depends on how many people you can see. These are one-call closes. So if you can see 5 people in a day and you're closing 3 of them, you do that, 4 or 5 days a week. That's a pretty good healthy income if every case is worth at least $1,000 of commission to you. In the middle income market, each case can be worth $2,000, but you're going to take a little bit slower process because you do a comprehensive job. When you're doing the comprehensive job, yeah, it slows it down, but at least you have a massive market to go see and to serve with your products. And they can have increasing and differing needs over time. So these might be $2,000 or even higher average case commissions. You might be taking 2 meetings to do it, so it might be $1,000 per meeting. But being able to be positioned there as their advisor earlier on, you're going to grow with them, they grow with you, you take care of them, they're going to move you into the yellow property group on their own. The yellow group does a lot more with rollovers. If you're doing assets under management, hey, $500,000 put into an asset management account at 1% a year is $5,000 per year, as long as you take care of the client. So that's not a bad case commission. And if you allocate some of that into annuities, you can, those cases can be as high as $20,000 of commissions. The more that you're working with how you allocate between annuities and wealth management. If you're working with the nice bigger cases with these businesses, yeah, they could be $25,000 plus per case. But can you see them regularly, often enough to justify doing that exclusively? Starting off, I wouldn't bet on it. After a while, you may be getting referrals only to those groups, and you're really bringing home the money. That would be great once you're there. And these opportunities are only found through fact finding with generally these people. So anyway, that's kind of it. Maybe this presentation ran a little bit too long, but I hope this is helpful to help someone who's new to the insurance business. Maybe a career opportunity fell out, who knows what happened, but you're looking for a market. Use the Monopoly board to help you to guide where you want to be, help evaluate the different companies and their product line and where they want to be, and determine if you're going to be a good fit. So anyway, till next time.